Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the Wednesday, the 30th of July, slightly late running. Apologies, 5 minutes, 6 minutes late running. Bull versus Bear webinar. Steve Miley here on the call for trading. Welcome, everyone. Apologies for the delay, slight technical hitch, but we're all good to go now. So, just going to go for our usual regular run through in here today. Been away for a few days, back in here, but I'm actually going on properly on vacation. So, you'll be in Duncan's capable hands for the next couple of weeks. There will be a period. I need to double check the period, but we'll put a message in here and we'll announce it before. But there will be a period. I think it's the 10 no no the 7th through the 14th, where we will not have any coverage for the webinars, but we'll update you on that closer to the time. So let's get into today. We're kicking off the probably, I'm going to say, the busiest back-to-back 3 days of the year for a combination of central banks, macroeconomics and earnings and geopolitical events that we're probably going to have this year, the biggest three back-to-back days. So Wednesday, Thursday, Friday this week, and we'll run through all of it with you now. So going into today, it's the Fed. Okay, so the Fed, 2:30 Eastern time today. We also, though, do get the ADP, non-farm employment change. Remember, Friday is the 1st of August. Sometimes we don't on the first. The first Friday of the month is usually the employment report. Sometimes when it falls on the first, we don't always get the report on that day. This month, or should I say next month, for the 1st of August, it does fall on a Friday, and we are getting the report. So we get the ADP non-farm employment change. It's up and coming in 38 minutes. So we got that coming up. That's, remember, the precursor. It's the private payroll number the precursor is the actual official number that we get from the Labour Department on Friday. So this is the ADP non-farm employment change number. So we get that in 37 minutes. That could have a significant impact on markets. And then we move on. We do get Bank of Canada today, by the way. Bank of Canada coming up today. No interest rate change expected. And then we get the Fed. So the Fed, the FOMC statement, interest rate decision at 2:00, and then the press conference at 2:30. Probably the press conference, the most interesting thing there. Pretty much nailed on no rate cut. We'll talk about that shortly. Or no rate moves at all. Then we throw into tomorrow. You can see we're starting to get some Chinese PMI. We also get Bank of Japan interest rate decision coming up. Before I go into then tomorrow, we also get CPI data, European CPI data. We also get some PCE data in here out of the US, which is going to be much watched data. PCE year on year, month to month. Remember, that's the Fed's preferred measure of inflation. And then on Friday, we get the employment report. So pretty much in here, a really busy 3 days. This is on the macro data side. Wednesday, today, we get the ADP number and then the Fed. Tomorrow, Thursday, we're going to get that PCE, US PCE inflation data. And then Friday, we get the employment report. And then we turn our attention to earnings. And today, we get both Microsoft and Meta after the bell today. So Microsoft and Meta after the bell. And moving on to Thursday after the bell, Apple and Amazon. So 4 of the Magnificent 7 reporting within a 24 hour period from after the bell tonight. And then on top of that, on Friday, remember, Friday is the deadline for the tariffs on the 1st of August when the tariffs kick in. Now, most of the major players have now made their deals with the US. So really, the tariff deadline is not so serious as it was. China, Europe, UK, all long done. Well, Europe was only done recently, but most of those are this week. But most of those all been done in the past. So most of the major players have done the deals now. So not too worried now about that tariff deadline, with most of those trade deals now put to bed or in there. At least the talks have moved to the point where we're not going to have the tariffs imposed for most of the major trading nations with the US on the 1st of August. So that's a little less important than it was. But we have this wealth of macroeconomic data and then 4 of the Magnificent 7 reporting Wednesday through Thursday. So let's turn our attention to some of the macro and looking through the major news headlines. Well, a tsunami reaches Hawaii, an earthquake. as earthquake puts Pacific on alert. So the whole Pacific on alert with an earthquake in the Pacific, triggering tsunami warnings, 4-foot tsunami waves recorded in Hawaii, and the initial signs of tsunami detected in California as well. But at the moment, things are looking okay. Flurry of trade deal announcements, still a little light on details. Well, we know that, but I mean, that's not the end of the world. But at least some of those tariff deals are put in place, although they're light on details in here at the moment. Markets in here fairly flat going into the day ahead of obviously the Fed that we've got coming up, as we mentioned. So US futures waver and countdown to the Fed, and then the tech reports, as we've already mentioned there. Fed to avoid clear signal on rate cut timings. I don't think we're going to get much out of the Fed. Probably the Q&A is our best bet. And look, get ready for a 3-day obstacle course, talking all about that. So US trade was easing somewhat following a series of framework deals. As we've already mentioned, Federal Reserve, Microsoft and Meta, and then we've got that jobs data, etc., etc. So, just all of that in here, what we've got coming up in the next 2 to 3 days in here. Super busy in here. So Fed to hold rate. This is now moving on to Reuters. Fed's to hold rate steady despite Trump's push for big rate cuts. Global stocks misses investors pay for Fed meeting, tariff deadline. And if we look at the around the world in here, Nikkei is pretty much unchanged. The Hang Seng was down over 1% this morning. European exchanges in here, the UK FTSE is down about 0.25%, with the German DAX up 1/10 and the French CAC up 4/10. So kind of mixed in here, but not particularly moving too much in here. And if we look at the US futures going into today, just going to give this a quick refresh in here. US futures, where are we? So we're up about between a tenth and 0.25% in here across the S&P and Nasdaq going into today, so slightly higher. Turning our attention to the interest rate markets in here, well, look, nearly 98% chance of no change in here at today's meeting, so not much to come today, and only a 34% chance though that we're not changed by the September. So the first rate cut being priced in for September, pretty much a 66% chance for that. And we're moving on to October. Then we've got a 50-50 chance. Well, sorry, 50% chance. Sorry, I'm going to start there again. Only a 17% chance we haven't had a rate cut in here come the October meeting. And then here we've got basically a 33% chance that we've got 2 rate cuts by October. And if we go to December, pretty much nailed on 2 rate cuts by the end of the year, with the outside chance of up to 3 rate cuts by year end. So that's what we're looking for going into today. On the yield side in here, just get this to a better chart. So you see a significant move back to lower yields, just keeping the market very much pinned within this range we've been in. So interest rate markets fairly calm in here. Lower yields, higher price bias over the last 24 hours. And if we go to the sprint higher in here, has us an upside bias on price at the long end, 30 years, 10 years and 5 years in here. We're all looking more bullish within what is a broader range though, but we still stay less of a bid, less of a rally on the short end. So the bias in here is still for lower prices, higher yields at the short end. And turning attention to the equity indices, staying bullish. We have had a sell-off and a rebound in here, but what the underlying theme remains bullish in here. So markets, both the Nasdaq and the S&P, not far off the all-time highs, and remaining for me bullish going into today and into these 3 days of super busy. So I'd say keep your powder dry, guys. It's going to be a busy few days. We could see volatility. It's been very much a grind high, as you can see in here, through July. But we could get some fireworks going into the end of the July and beginning of August, with all the macro data, all the earnings, and obviously the tariff deadline looming for the end of this week. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. I'll be, am I on the webinar back tomorrow? Yeah, I'm on the webinar again tomorrow. So I'll see you on the webinar again tomorrow. But I'll be out from Friday, so I'll pick up with you guys again later in August. But I'll see you again on the webinar tomorrow. And we'll be, given there's no technical issues, we'll be on time tomorrow. Take care, stay safe, and have a great trading day. Bye.